you kind of wonder when those supplies are going to run out and when we're going to see those placements drop off a little bit.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Thanks for joining us today as we take a look at Tuesday's market action. Today, I'm joined by Justin McKinney of Comstock Investments. And Justin, as I look at the grain markets here today, it didn't seem like a whole lot going on. It's kind of like we're marching in place today. What's going on?
Want more? Sign up today for our premium content. You'll receive our reports twice a day, plus every morning, an in-depth market analysis with Eric Relf. Every afternoon, you'll receive our daily podcast with Marlin Bohling. The first month is only $1.
That's a very good analogy, Marlin. Corn range was 408 on the D's on the low up to 413. Nothing really happening, closing near the highs of the day on the corn. Soybeans ended up about a penny and a half here today. Again, pretty range bound. China being out on holiday Monday and Tuesday. We'll see if they, get a little bit more spice into the market as we open up the overnight session tonight. But when you look at the grain market, we had a couple things come out. First and foremost, we have CONAB came out at 166.3 million metric ton for next year. That was up 19 million metric ton versus last year CONAB's number. Now, we've talked about this many times in our Comstock written report. We still have a discrepancy between the USDA and CONAB on last year's yield. So, if you're going to compare CONAB to CONAB, and maybe not so much CONAB to the USDA. However, that was only on about 1% acre increase. So all of that increase in production came off of what they anticipate better yields. So we fast forward, we get the midday weather forecast out today. Nothing improving in Brazil, maybe a little bit of rain in Argentina in certain spots, but there was nothing in the short term or the extended forecast, 11 to 15 day, that had any significant amount of water coming for Brazil. So we do have that risk in the southern growing hemisphere that possibly they could start this crop out not in the best shape. So if you look at 166 million metric ton and start shrinking away from that, where do you go? It would be tough to be down in the 147s, but it's not out of the question. So still a little bit of risk in that South America crop. We got plenty of time to plant it, but enough that we push pause on selling the futures anyway today on the soybean complex.
So it seems like in the majority of the Corn Belt, we are still looking at a warmer, drier regime for the next week or so. It's going to be helpful to the harvest. Some say that, you're going to have to take the top edge of the crop off a little bit. So it's kind of a double-edged sword there. How do you look at it?
First, I have a little bit of an issue with the crop ratings. We have low water in the Mississippi where I live. The mid to upper Mississippi is down several feet from the spring's flooding. We just haven't had any real measurable precipitation in the last, basically 2 months here. So I kind of have a little bit of a bone to pick with those. We have ratings holding steady or slightly, a point plus or minus here on corn and beans, but we continue to have these really high ratings. We have these really high expectations for bean yields and corn yields. Yet we have a drought monitor that's expanding and we have a river level that's dropping. So, Illinois is going to be great. There's a lot of debate going on what the crop's actually going to be. And it feels like the yield reports I'm getting one will be pleasantly surprised. Record on my farm, next county over, we're talking, average at best, right? Especially on the beans. So we were just getting started in harvest this week as the crop condition report came out. With all this dry weather, we surely should be making progress moving into next week. I know there's some beans getting taken out today right around this Rochester, Minnesota area. Early yields were better than what I would have expected. I think they're coming in right in that 60 bushel to the acre range. So maybe a little bit better than what I expected here. But then the next area over, not all that far away, we're hearing, it's a little bit under APH. We talked about this, I think, last time I was on Marlin about, corn silage yields being extremely variable this year. And while we finished ours up in the last couple of days, nothing really to write home about. We obviously didn't chop our best fields. but still under APH or average. So, you know, where we go, I don't know. I know the good crops are probably going to get taken out first. It sounds like Missouri's got a real bin buster going on down there, and most of Illinois will probably be record or above average. So by the time we get to where I live, is all the crying already going to be done? I don't know that, but there's a lot of anticipation for that anyway.
Well, I know from my perspective here in the Mid-South, Francine turned out to be a big bust. They were predicting 1 to 4 inches of rain where we are on the Kentucky and Tennessee border area. And I don't think we got 10 hundredths out of that thing. We happen to be in kind of a dry slot. Some areas got over 5 inches, but that was down toward the Alabama border. That thing flamed out in a hurry. So like you say, it didn't really contribute much upstream. And we had really been hoping on the barges being able to load up and carry more grain south, and now they can't do it after all. So that's a bit of a concern. Have you talked to customers that have been taking corn out of the field, the new crop corn, to see, if there is any kind of a trend to observe yet or not?
It's so sporadic. I would say the guys that I have doing corn, or the people that I've talked to, have been pleasantly surprised. I have a client down in southwest Iowa who was combining some corn yesterday. And while it was not their best farm, and they had some wind snap and some green snap on it, still very, very pleased on that crop. I was through that area in mid-June. It doesn't surprise me. It looked fantastic in mid-June when I was through there. So I would anticipate theirs will be pleasantly surprising to the upside. Well, there's western Minnesota to chew through theirs yet, and we'll see how that fares out.
Have you heard anything in the way of soybean pod abortion yet?
I have not, but I did take a ATV ride around my fields over the weekend in southwest Wisconsin. I would have bet the farm that I planted them about perfect timing. We had rain early. It just dried up. I was not impressed with the pod size or the bean size. Now, if you move about an hour and a half straight west as the crow flies from me, I had a farmer client there. He was combining some beans over the weekend and called me. And while he said that they were decent in that 55 bushel range, they could have been really easily 70 had we had some water there. So I'm afraid I'm probably on the lower end of what I could have been had we had a little bit more water. And I'm kind of wondering if that isn't going to be the trend the farther north we get in the harvest.
Here on Tuesday, the wheat market seemed to close right in the middle of the trading range, kind of uneventful as we came across the finish line. I don't know if that really accomplished anything or not. What do you see hampering the wheat movement right now? Because it is getting time to start planting.
Yeah, for sure. So we had a really nice recovery in the wheat market the last couple of weeks. Some dryness in the southwest United States. Other spots around the world being relatively dry. Yesterday, we took a pretty good beating in the wheat. Today, I felt pretty decent the way we closed today. It would have been nice to see a higher close after yesterday, but they weren't able to add on to and push it down any lower. We have cheap wheat still being pushed down to the market from other places in the world, and that's just probably going to be the theme as we move forward. Silvacon came out. They upped their yield estimate, 400,000 metric tons to 82.9. Most of that coming from the Siberian type places that better than expected yields. Again, do you trust it? I really don't know. I watch the FOB values on the world level, and that seems to be the truest indicator. So we do have some things in the wheat market. We're going to need to see some better weather in southwest United States. I did see a weather map yesterday that had some rain forecasted for that Kansas region. So, the pressure yesterday was probably justified, but that was a pretty steep move for one day. So it was nice to see a little bit of bounce in that today.
I want to remind you to like these videos, subscribe to the videos. You click on that little bell icon down below, and then we'll let you know every time we post a new update. And share these videos with others. Boy, we appreciate your help as you continue to help us grow into one of the fastest growing ag podcasts out there. So thanks a lot for all that. Well, now let's take a look at the livestock trade here. A lot of plus signs. I see a lot of triple-digit gains over there. It was pretty universal. Just about every contract you look at there. Why so enthusiastic?
Well, we do have that cattle on feed report coming out on Friday, which will have the pre-report estimates in the Comstock report and some commentary on that, which, we're looking at what comes out on Friday doesn't get traded till Monday, right? So it's hard to put a pulse on the market. What we did have is we had some over-the-top cattle sales last week that were not reported, which were a couple dollars better than what was reported. So we had a higher market. We have a cattle on feed report coming up on Friday. Early estimates are for about 100.7% on feed, placed at about 95.5 and marketed at about 96.5. So the wide number is on the placements again. We keep finding these cattle to place. You wonder when those are going to dry up, though. So you look at the drought in Mexico, which has been of epic proportions. We've continued to move cattle across the border, things like that. You kind of wonder when those supplies are going to run out and when we're going to see those placements drop off a little bit. So we have that risk coming into the feeder cattle market and the fat cattle market with the stronger cash. A few traded in Iowa yesterday at a little bit better money, not a significant amount ahead. So as we move towards the end of the week and those packers look to procure those cattle, we could see a little bit of uptick in the cash market, which would support the futures. Caution is warranted, though. We saw boxes trail off again today, 303 and change at the midday. Selects down there in the low 290s. We do need to see a recovery in the boxes. Packer margins still in the positive. We're looking at, in that $30 range this morning, off from $50 not that long ago. Though, if we cannot keep those margins decent, I would imagine that they'll scale back the chain speed on the harvest, and we could probably take a couple bucks off them cattle pretty quick.
So is the livestock trade really susceptible to a big move once the Fed comes out with their announcement, do you think?
Well, cattle have been trading step with step, except for a few exceptions on the equity markets. Today, we're had a really strong, nice close in the cattle market, and yet equities haven't done anything. So it feels like we're probably trading a few more fundamentals in the cattle market today. Who knows what the equities will bring tomorrow? We're pretty much talking somewhere in that half a basis point or 50 basis point cut on the rate cut. I don't know if the market gets a 25, if that's enough of a surprise to really hamper the cattle market or what. I guess time will tell on that.
Justin, thanks for helping us navigate the markets here on a Tuesday. Great information as always. And look forward to talking with you once again. I appreciate that. Justin McKinney with us. He is with Comstock Investments. And that'll do it for this episode. Thanks again for being a part of our day and allowing us to be a part of yours. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.